Hey, it's Patrick Moore with Ironclad Wealth Management here, and I've got the next video in our series on how you can save taxes when you're getting ready to sell your business. And today's topic is the first strategy that doesn't require any pre planning or any insertion into any sales agreements. So, this is the first thing that you can do if you got caught surprised with a sale. If an offer materialized out of the blue and you gotta take it, this is something you can still take advantage of. And the topic today are qualified opportunity zones, or QOZ funds. So not only can QOZ funds help you defer sales or taxes on the sale of your business, they also can grow completely tax free. So, with that being said, I've got my usual disclaimer here. This is all general information. These are things that you need to review with your own individual situation and with your own individual tax advisors. Having said that, I hope that you do take some time, watch this, listen to it, and that it does help you and your personal life. So, what is a QOZ fund? Well, a QOZ fund was created in the 2017 Tax Cut and Jobs Act, and they were made permanent in the most recent, the One Big Beautiful Bill OBBBA Act in July of 2025. And they're a pretty neat little thing because the trade offs here are very cut and dry. They're very clear. And I think that intuitively they make sense to people. Essentially, what a QOZ fund is that if you as an investor take your money and invest in certain underprivileged areas, the government gives you tax benefits with the idea that, hey, let's invest money into these communities and kind of lift them up out of poverty. Now, there's complicated rules related to them, like, certain amount of assets, and there's a lot of reporting requirements for these funds, but it's fairly simple. The goal is if you improve communities, you get some tax benefits. So it's pretty nice. Now, what are those benefits? The first, and the one that applies to most of y'all here today, is that if you do it at the right time, you can defer taxes on the sale of your prior investment that you're looking at selling, which in this case was your business. The second thing, and possibly the larger benefit, in fact, I would say probably the larger benefit, is that when you invest that $10 million from the sale of your business into a QOZ fund and it grows to $20 million, that growth, if you follow the rules and you hold that investment for at least 10 years, is completely tax free. Third is that when you do defer gains from a previous sale, you get a 10% boost to your basis after holding it for 5 years, which essentially reduces your taxes by 10%. So you get a 5-year waiting period and a 10% basis boost. And if you do it in a qualified rural zone, it's a 30% boost to your basis. So there's a lot of cool, nifty benefits built into this program. And the other thing is like I said earlier, a lot of these other strategies that we've talked about, if you've looked at some of our other blogs and videos, they're like, hey, yeah, you can do this. But to do it the right way, you got to be ready 3, even 5 years in advance. A QOZ fund does not have that requirement. Now, having said that, there are some timing requirements. And the first is very similar to a 1031 exchange. To get the deferral benefit, you have to invest into the fund within 180 days of your closing. So if you wait, you're not going to get that deferral benefit. Now, the next thing's a little confusing because this project was made permanent in the most recent tax bill, like I said. But a lot of those rules from the most recent tax bill don't kick in until 2027. So we're in this weird limbo period with QOZ funds. If you sell your business before 2027, your taxes can be deferred until December of 2026, which as I'm recording this today, it's September of 25. So it's only about a year of deferral. To be quite frank, that doesn't really move the needle for me. But in the most recent bill, it was made permanent. And so if you sell your business after 2027, you get a full 5 years of deferral, and a new 5 years starts every year. So there's no shot clock on it like there is now. And then finally, the big benefit to get that exclusion on the appreciation of your fund, it's a 10-year hold. So there's definitely some timing related to this. Now, looking at this little comparison here, the biggest difference is that it went from a temporary program to a permanent program. And the big thing is when you look at this, because the old program was temporary, You can only defer your gain until 2026. And that basis step up, if you look at that third item on this chart, the basis step up, you got a 10% basis step up after 5 years and 5% additional after 7 years. But you had to have held it before December of 2026. As you can know, unless you're a time traveler, you can't hold something for 5 or 7 years by next year. So that's kind of a moot point if you were to sell your business today. However, if you wait until 2027, that 10% rule does kick back in. So when I'm looking at this, I see the QOZ as being a fantastic tax benefit for general investors because you get that full exclusion in each program if you wait 10 years. However, for people looking to sell their business, it really becomes a more effective tool after 2027 once the OBBBA kind of new permanent rules kick in. Now, what are the drawbacks? Well, like I said, you're limited to your tax deferral if you're selling before 2027. The second limit is, hey, to get the full tax-free benefits on sale, you got to hold it for 10 years, and that's not a short period of time. Not only that, you have to hold it for 10 years, but your tax bill is only deferred for 5. So in year 6, you may need to come up with a nice chunk of change to pay your taxes. So there's definitely some timing things in here that you have to consider. Now, the other thing is that not all gains qualify for this treatment. Ordinary income items like depreciation recapture, inventory, AR, those don't qualify. So having said that, let's look at our example here. We got our favorite family we've been following through every video. It's the Daniels family. They're a husband and wife duo in Georgia trying to sell their engineering firm. They're looking at a $9.5 million capital gain or taxable gain. Now, what I've done is I've looked at this and I've said, okay, in the left-hand side, we've got no QOZ funds. In the right-hand side, we've got QOZ funds, and they're both going to grow by 7%. In the left-hand side, just think of this as like a taxable brokerage account, something like that. And so what you can see is if you just take your money from the sale and invest it, they would pay about $2.35 million in taxes. But conspicuously, you'll note that in the QOZ fund, they don't pay any taxes for 5 years. And in year 6, they pay their taxes, but they get a 10% reduction in those taxes from holding it for 5 years. So if we look at that, and actually, but if we don't look at that next box yet, but if we look at the net proceeds, that deferral benefit winds up being worth about $1.5 million to them in year 6. It's a huge, huge difference. Now, in the non-QOZ fund, if you look at the gold box that did pop up there, if they then hold that investment for 10 years, sell it again in 10 years, they would owe taxes again. And it would be about $2.4 million in taxes there in year 11. Now, having said that, if they do the QOZ fund, they follow all the rules, they wouldn't owe anything in taxes because they held it for the 10 years and had the appreciation exclusion, which, if we compare things at the end of the day, that's more than $4.5 million in additional income. So it's a huge, huge difference following the QOZ rules and just listening to what the government wants to tell you. Hey, put your money here, we'll give you tax benefits. Okay, sure. So who should consider a QOZ fund? Well, I think owners with little pre-sale planning are perfect candidates for this because there are some cool things you can do in other investments if you have more time. So I think a QOZ fund is kind of, if you're looking for some things to do as the business closes, it's a great thing. Or if you already have an LOI signed, it's something to look into. The second thing is you have to have a long investment horizon. They really don't make that much of a difference. They make some difference, like I said, but not a huge difference if you don't hold it for the full 10 years. You need to have access to cash to pay that tax bill year 6. And as always, you should never do your full investment all in one investment. So what do? Well, we review QOZ funds from your perspective. We're not a QOZ fund manager. We're people that work on your side of the aisle to look at all of the various options because this series has gone over like 7 of them to identify, okay, what are you trying to accomplish and what's the most efficient path to get you there? Well, if the QOZ fund is the most efficient path, we'll analyze the impact, help you figure out which managers to use, help you identify multiple different funds and managers. Because like I said, you don't want to put $10 million from your $10 million business sale all into one project. That's letting the tax tail wag the dog, because what if that project goes under? You have to identify and look at this at the bigger picture to make sure that it's right for you. And then finally, we will work with your CPAs, your attorneys, and the fund managers to help you get the best solution. So if that's something that makes sense to you, please schedule a call. We're happy to do a no cost, no obligation intro call just to see if there's anything we can do to help. It only is a 15-minute call because we don't want to waste your time or ours if we can't help. So hopefully you can schedule a call before your LOI. But if not, this is a strategy that you can still benefit from. So hope you have a great rest of the day and you enjoyed this video.